All right, let's talk about Palantir, ticker PLTR. It's been one of the market's most explosive, most talked about stories. But after a monster run, it's kind of hit a wall. In this breakdown, we're going to dive deep into the technicals and let the charts tell us what might be coming next.
And this is really the million-dollar question, isn't it? After just an incredible surge, PLTR has gone quiet. So are we looking at a healthy pause before the next big push, or is this a warning sign that the party's over? Well, to get closer to an answer, we have to look at the data.
You know, to really understand where Palantir is right now, we've got to rewind the tape. We need to go back to its recent past, and for PLTR, that means looking at one seriously powerful summer.
This timeline really lays out the whole story. The stock just took off in early summer. It rocketed up, hitting highs by August. But then things changed. September and October brought this period of sideways chop, just bouncing around. And that's a classic sign that initial explosive energy was starting to get tested.
Now here's a huge piece of the puzzle, the volume. Think of volume as the crowd's noise level. During that summer surge, the crowd was roaring. Trading was heavy, which shows a ton of conviction. But then, during this autumn cooldown, the volume really quieted down. And that tells you a lot. It's a classic sign that the explosive phase is over and the stock has kind of entered this wait-and-see mode. It's consolidation.
So the price action tells us what happened. It went up, then sideways. But now let's look at the technical indicators to figure out why. It's time to pop the hood and see what's going on with the engine.
First up, moving averages. And honestly, the best way to think about these is to picture a river. Your short-term averages, like the 5-day or 20-day, that's just the choppy surface of the water. It tells you what's happening right now, day to day. But the long-term averages, like the 50-day or the 200-day, that's the deep, powerful current underneath. That tells you the real direction the river is flowing.
In this table right here, this highlights the main conflict for Palantir at this very moment. In the short term, that choppy surface, the price is actually trading below those averages, and that signals some immediate weakness. But, and this is a big but, look at the long-term trend, that deep current. The price is way, way above those longer averages. So what does that tell us? We're seeing some short-term choppiness, but it's happening inside of a very strong, very powerful long-term uptrend.
If we look at the other gauges on our technical dashboard, they basically confirm this stalemate. Momentum, your RSI, it's right in the middle, totally neutral. Not overbought, not oversold. Trend strength, it's pretty weak right now. But here's a really interesting clue. The on-balance volume, or OBV, has actually been rising. That suggests that even while the price is going sideways, some bigger players might be quietly buying up shares. It's a very mixed picture, which honestly is exactly what you'd expect to see when a stock is consolidating.
Okay, so let's put it all together. We have these conflicting signals, right? We've got this short-term weakness fighting against some serious long-term strength. What in the world does that actually mean?
Well, when you piece the whole puzzle together, the consensus is pretty clear. This doesn't really look like a stock hitting its peak. It looks more like a healthy consolidation. The best analogy is a race car pulling into the pit stop. After a massive sprint, the stock is just catching its breath, letting those longer-term averages catch up, and basically building a solid foundation for its next potential move.
So if this is a pit stop, the next question is obvious. Where's the action going to happen when it gets back on the track? Let's map out the key levels that are going to define this next chapter. This is the battleground. As of right now, the price is hovering right around 173. And you've got to see this as more than just a number. It's like the 50-yard line in a football game. It is the absolute center of the current fight between the bulls and the bears.
And these are the lines in the sand. On the left, you've got support. Think of this as the floor. It's where buyers tend to show up and defend the price. And that 170 level is a really key zone to watch. Then on the right, you have resistance. That's the ceiling, where sellers have been stepping in and taking profits. For the bulls to regain control, they absolutely have to smash through that ceiling, especially that recent high near 177.
Okay, so we have the backstory, we've checked all the gauges, and we've mapped out the battlefield. Let's put it all together and game out the potential paths this stock could take from right here.
Ultimately, it really just boils down to one of three possible storylines. First is the bullish path. The price holds that support floor around 170 and then punches right through the resistance ceiling. That would be the signal that the uptrend is back on. Then there's the bearish path. That 170 floor breaks, and that could open the door for a much deeper pullback. Or there's the neutral path. We just keep chopping sideways between that floor and that ceiling as the stock just continues to build up energy for its next big move.
So the bottom line is this. All the technical data points to a stock that is resting, not one that's broken. It's truly at a crossroads, balancing that short-term fatigue against some undeniable long-term strength. So is this just a pause before the next big climb? Or is it a warning sign from the peak? The answer is going to be written by what happens right at those key battleground levels we just talked about. And that is the story the charts are telling us today.